All right, here is a very, very warm welcome to you all. I am Devang Mehra from the Financial Analyst, and today is all about pullbacks. I'm going to talk about so many interesting things today. It's about pullbacks, how to identify pullbacks. When the markets are trending up and you get a dip in the market, when do you know exactly when to enter? I'm going to talk about that. We'll do tons of examples. I've lined them up for you. We'll also talk about multiple time frame analysis. So no matter what, you learn something new, whatever level of trading you're on. So enjoy the weekend, get your popcorn out and enjoy this video. I always say it's going to be a short video, but all of you are very aware it's not going to be a short video, but I'll try to keep as short and sweet as possible. So before we get started, hit on the like button, comment, subscribe. You all know what to do. It means a lot to me always. So I'll ask you a simple question, guys. Have you all ever encountered this phenomenon? When, the market is going higher, it's inching higher, you get 10% of a company, it rises up in a couple of days and you're waiting for a pullback. Pullback basically means, when the price is dipping after a great rally, when the price is cooling off. Pullback generally happens when people who have bought at lower levels start to book the profits. That's generally when the pullback happens. So it's our goal to identify what could be the gravity of the pullback. Now, coming back to my question, has any of you, encountered this? So markets, let's say Bajaj Finance, it made a high of 57.12, roughly 57.50, and then it started to come down, and we started buying Bajaj Finance here at 54.64, expecting that it's a good 5% fall. Now let's start to buy, and the next day market gives a good gap down, goes down 200 points, and eventually comes to all-time highs. So we basically are fools. We have been fooled in the markets, and we always think to ourselves, I should have waited just 1-2 days more and I would have made more money than anyone I can imagine. So that is why I'm coming out with this video. I'm going to help you very well to time the pullbacks. I'm going to help you identify what could be the potential bottom of the pullbacks. We'll use multiple time frames. We'll use ATR, average to range. I'll try to give you a disciplined, systematic approach. So if you think it's 100% accurate approach, it is not. We can miss a lot of rallies, which I'll show in the examples, but it's not about being 100% right. Even Gann himself was 92%, accurate, 92.5% odd numbers. So you can't be 100% accurate. Through this approach, you'll have a system to basically work on, but I will not be promising you 100% accuracy. You might miss a lot of great potential moves through this system. So without further ado, let's get started with the rules. So first of all, what we need is a pullback, right? Pullback is, as I said, a good rally coming in the market followed by some profit booking. The goal, as I said, is already aware to all of you. We're finding the bottom of the pullback. So what we need to do is we need to go to a multiple time frame analysis. Now, this approach that I'm teaching you, it can be used for any setup. I will start with swing trading. Swing trading, I will start with basically finding the bottom of the pullback on the upside. I will also talk about an example of Manappuram Finance, where we actually find out a pullback of the short trades. Markets were plunging down, markets came higher, gave a pullback, and they again went down. I will give an example how to identify this as well. I will also give an example of intraday trade, where we talk about Sipla's trade, 30 minutes and 5 minutes. We'll talk about very interesting things. So watch it slow. If you don't understand, I'll make it very slow. Keep on watching it again and again. It's going to help you throughout your trading career. Now, I will start with swing trading perspective. So as all of you are aware, I like bigger time frames. I personally love the 1 week chart, but for the sake of these examples, for the sake of simplicity to the audience, we will use 1 day charts for identifying cooling off periods or pullbacks in the market. So we can see over here that Bajaj Finance, went up, it came to the all-time highs and then started cooling off. So as an investor, you're wondering, when do I enter Bajaj Finance with a good systematic approach? What you need to do is 2 things. You need one oscillator, and there are many oscillators available. You have the RSI, you have stochastic, MACD could be considered, maybe it's an indicator, CCI, commodity channel index, tons of availability. But I think most of you are very well aware of RSI. So let's take it into consideration. All the others can be used relatedly, right? You can relate to them. So what we have one simple rule. We are on a daily chart. Why? Because we are identifying a pullback on a daily chart for a swing perspective. You could obviously use it for intraday also, but it's a swing trade I'm showing you right now. what we will do is we will also put out an indicator oscillator like RSI. Now, what we need is RSI in oversold condition. Simple, right? Everyone knows what RSI is. Everyone knows oversold condition. But on a daily chart, for RSI or for stochastic or any indicator to become oversold, you will actually need 14 to 15 days of data for it to become oversold. Why? Because we use the 14 general period of RSI, and you know very well that rarely happens. How many times have you seen on a daily chart RSI after a breakout comes into oversold? It's impossible, literally impossible, unless until market really consolidates and gives you a dips and then goes back up. But it's literally impossible. So what we need is, the rule is, we need to find after the pullback is starting, we need the RSI on a smaller time frame to show us oversold conditions, because all of you are aware overbought and oversold conditions of RSI don't sustain. They have to reverse in the direction. So we are not again depending on indicator. We've already identified the trend. The trend is up. It's given a great breakout. You can very well see in the charts. It's a clean trend line breakout. We are finding a good pullback. By the way, a lot of people are, must be wondering, why can't we just trade the retest? What I mean by that is, why can't we get a good breakout in the market and trade the retest and then do that? So the simple answer to that is, guys, in a fantasy world, in a magical world, that would be great. But life is not so easy. Life is not so easy, and that does not happen all the time. So you can't keep depending upon retest. If it happens, nothing like it. It's a best pullback. Have small stop losses and trade. But as I said, it's not a fantasy world, and we can't keep depending and relying our lives on that pullback retest. So what I do is, what I like, you can always switch around with the time frames. Let me know in the comments if you find a better set of combination. But I like to combine the daily chart with the hourly chart. So what I am going to do is, I'm going to open multiple time frame. Multiple time frame basically means I'm going to use this simple tool on the TradingView platform. I'm going to open two screens together. So it's going to look very weird. But what I'm going to do is, the upper screen is the Bajaj Finance 1-day chart. What I have done is, I have synced the symbol and I have synced the crosshair. Crosshair basically means, this pointer that you're seeing on the screen, whatever is marking on the upper chart will correspond to on the lower chart. So for example, I know very well that, this 14th May, where is it on the lower chart? Basically, it's linking each other. So I've also synced the symbol so that both the stocks will be the same on the screen. So what I am doing right now is, I have RSI on both the screens. I have Bajaj Finance on both the screens, 1-day chart on the upper screen, and on the lower screen, I'm going to open the 1-hourly chart. So I'm doing a multiple time frame analysis. As I said, I'll teach you two approaches. One is very simple. One is little bit more complicated, but again, simple. This is the second one, the more complicated but simple one. After that, I'll teach you a shortcut hack also. Don't worry. So Bajaj Finance 1-day chart, we saw the pullback is starting, and you can see very well on the bottom. What is the corresponding figure on the bottom? Let me just show you. It's getting a little bit tight, but hopefully things will become quite clear when I'm finished with the example. So you can see that this pullback that I'm seeing from 4th of May 21 to 14th of May is nothing but this area over here. So what you need is, when the pullback starts, you can see that it was starting. This is a daily chart, by the way. We got a shooting star and the market starting going down and down and down. So this is corresponded by this area over here. So what I need right now is, when does my oscillator enter the oversold territory? You can see over here, markets are going down and down and down. It's not in the oversold territory. Let it go down. Let it cool off. It's coming down, down, down over here. Can you see at this point of time, the RSI enters the oversold territory? And believe it or not, this time over here, you can see was nothing. This is the date 12:15 p.m. on 14th of May. And that exactly has been the bottom of the pullback of Bajaj Finance. Nothing complicated, but please wait for the examples. Lots of things have to be covered. Simple approach. I found the pullback on the daily chart. I identified or tried to do so with good accuracy on the 1-hourly chart. I think these are two good time frames that you could relate to. So when the 1-hourly chart shows me the RSI is oversold, and something very, very important, this rule number 2, which I said is the simpler tone. What we need is, either you wait for some entry, some kind of candlestick pattern there, and you can start to take entries. You can start to be a buyer in the market. You can put one ATR as stop loss, which I'll discuss later. You know how to put stop losses. One very simple approach, by the way, if you do not want to do all of these things, one very simple approach that I can suggest for beginners is, what you need is forget the multiple time frame analysis. What you could do is you could find when the candle is closing higher than the previous candle. Let me explain that. Let me explain that with an example. Then we'll again come on the charts. Let's say markets have rallied up and they're coming down and down and down and down. What you need is any candle closing above the previous candle like this. You can see this candle's high was over here, and this candle fictitiously is closing above this candle. So when you get a good pullback in the market and your current candle is closing is important, not high above the previous candle, that also could be regarded as a place to start to allocate your money to the investment. That's also a very, very good place. So you can see in this same example of Bajaj Finance, when the pullback started, no candle was able to close above the previous candle. You can see this candle lower closing, this candle lower closing, lower closing, lower closing. So you want the current candle to close above the highs. I repeat, if I was not clear, I want to close above the highs. So this, all of them were giving lower closings, and this candle over here you can see has given better closing than the highs of the previous candle. And this was nothing but the one that we have identified also with a multiple time frame analysis. I hope I'm quite clear. So if I can, by the way, I can also combine these two things. What do I mean by that? I'm trying to be as simple as possible. That's why I'll have lots of examples, so don't get confused. What I'm trying to say is, you can see the dip happen and you can see the RSI entered oversold territory somewhere over here. So use that, the current candle closing above the previous highs in this approach. Now in the 1 hour chart, find out when did the current candle close above the highs. So if you see all the other candles, when the RSI started to move into oversold territory, all the candles you can see were closing below. Even this candle closed below. But this was one candle that has closed above the last day's high, the last 1 hour candle's high. That is nothing but the bottom of Bajaj Finance pullback. Simple. I hope I've made it clear. Let's look at some more examples. Power grid. Daily chart of power grid. I'm going to hide all these markings. I'm not concerned. So power grid, you can see over here, what am I looking at in the charts? Great, some kind of a breakout happening here. Sorry for that. You can see at this point of time, a very, very good breakout happening in the oil and energy sector. So now when the breakout has happened, we can't chase the markets. We are essentially waiting for a pullback, and the pullback starts to come in here. So again, guys, we are not trading indicators. We have found the trend on a bigger chart. Now we're coming on a smaller chart to find the exact entry. Again, I repeat, you can't be 100% right. I'll prove that in the Eicher Motors example. Now look at this example, 1 day chart signaling a pullback. Open your multiple charts. I got the multiple charts. What you need to do is sync your crosshairs and sync your symbol. I'm syncing my symbols, so both the screens will be power grid. I'm syncing the crosshairs. That's fine. So you can see exactly. The upper chart is 1 day. The lower chart, as I said, for swing is going to be 1 hourly chart. Now we will try to find when is the exact price to enter this pullback, right? Now, I think I have to really zoom out this chart. Give me a second while I auto scale all these settings. So we are looking at this pullback. Perfect. So this is the pullback that we are concerned about. And now this is exactly what I have just said. If you look at in the power grid example, we got a good pullback in the market. But the question is, have I entered the oversold territory? You haven't. This is the 1 hour chart, right? You can see the pullback is happening over here, and markets 1 hour chart is showing you pullback is happening the same period on the daily chart, but I never entered the oversold territory. So you have to talk to yourself. Do I want to use RSI? Do I want to use stochastic? What do I want to use? As I said, always 100%, you are not going to get accuracy in this. However, if you use that simple approach I have taught you, you can probably get an understanding. So you can see in this approach, when did the candle start to close above the previous highs? It was this scenario over here. So I'm not using the number 1 criteria, the number 1 entry. I'm using the number 2 approach. After this pullback that's happening in the chart, this was the time when the market started to close above previous highs. I hope you're understanding. So this chart power grid, we did get a pullback, but we were not able to identify the exact price by using the RSI. I think if we use stochastic, probably we would have got a great better entry. So you have to think what you are more comfortable in. Stochastic is similar indicator, similar reading, similar oscillator. So you can see, yes, in stochastic, it did give you the signal. Over here, stochastic did enter oversold zone. So if you started buying here, you could have sustained with a good 180 ATR SL, with a good logical SL, you would have sustained. So my plea to you will be, try this settings with the stochastic as well as the RSI, and find out which is more accurate and what you're more harmonious with. And I think that way you can be more predictable in finding the bottoms of pullbacks or tops of pullback, which I'll come to in a second. So I hope this area of understanding is clear now. Let's go to Eicher Motors. I think even Eicher Motors, I don't know why I got power grid. Maybe I forgot why I got power grid. But I think even Eicher Motors is one of the same thing, the failed pullback. I don't remember actually. I was seeing the charts, but I can be sleepy at times. Yes, even Eicher Motors, you could not predict the pullback using RSI. You can see the pullback is coming over here. A great pullback is coming over here. If I use the approach number 1, which is that I need my current candle above the previous candle's high, you can see that's happening only over here. All the candles are closing below, closing below, closing below, and this candle over here is closing above the previous candles. So that is why you can see the pullbacks ended over here and markets, started to go higher. So if you again use RSI in this settings of Eicher Motors, again daily chart and the 1 hourly chart, you can see very well that RSI has failed to enter the oversold territory. So people who love the RSI maybe would not have found the bottom. But again, I believe stochastic would have done the job. So I'm trying to show you a lot of examples so that you know what's good and what is not good. If I use stochastic, perfect. You can see how stochastic has given you the entry. It gave you an entry somewhere over here, at the same time another entry here, and that was essentially the bottom of the markets of that pullback. So hopefully things are getting clearer now. Now finally, Manappuram Finance. So this is one more example on the short side, and I have another example of Cipla, which is basically on the intraday side. So bear with me while I hope now the concept is clear. If you're enjoying the concept, let me know in the comments if it's something helpful, something you want to try it out, but always backtest these things. And don't forget to like. It's always free to like. Right. So Manappuram Finance. Now see Manappuram Finance, what was happening. In Manappuram Finance, you can see very well markets have broken down. Again, my poor charting comes into play. You can see markets have broken down this great support. So if markets are breaking down the support, it obviously means that any pullback that you get is shorted. It's very simple, price action 101. In this approach, I'll be using ATR, which I'll explain in just a minute. What I am using is again 1-day chart, and I'm splitting my screen into 2 for that 1-day and the 1 hourly chart. The lower chart is nothing but the 1 hourly chart. Now see what I'm trying to get at. Simple things. I am trying to find, now this is a short trade. So in a short trade, what do I need? I need, if the markets are going higher, I need the RSI to be overbought. Now we are not buying. Buying we will do when the RSI is oversold. Now we will short the market. Why? Because markets have given a breakdown on the daily chart. So any rally that we get will be a shortable rally. Price action, technical analysis 101. So now at this point of time when the markets are rallying, try to find when is your RSI or stochastic overbought. And can you see at this point of time, you can see over here, little bit, my screen is small, so it's all compact. You can see at this point of time, RSI became overbought. This was nothing, but you can see at this point of time, the high is of 1 April 21. But a lot of people will be saying that the markets have still gone up 1 or 2 points above that. So that is where the stops come in. I want you to use an indicator called average true range. So in this entire concept, or even in the markets in general, I'm not going to get into what is ATR. There's lots of videos on YouTube explaining it, but ATR basically tells you what's the on average a share could move, in a particular time frame. So I'm using ATR. That's the indicator. It's called ATR. If I can show the setting, ATR is the indicator's name. So I'm using the basic settings. And when I say 1 ATR, I mean basically if I go on that candle, you can see on the bottom, the reading is 2 rupees. You can see over here, the reading when the markets went oversold was 1.78. So let's take a roughly 2 rupees. This basically means that at that particular point of time, the share of Manappuram Finance moves 2 rupees on an average in 1 hour. That's what it means. So what I mean is when you go short in the market, why? Because number 1, daily chart tells you to short. Because the structure is weak. Number 2, your hourly chart is telling you the RSI is overbought. So it's an extended rally which you need to short. And when you short over here on some price action, what you need to do is set an SL which is nothing but the ATR at that point of time. So you can see at that point of time, the high that candle made was around 157, 158 rupees, right? Over here, you can see the highs. It was around 158.75. You can see at this cursor where I'm drawing right now. So the ATR is nothing but 2 rupees, which means the SL will come where 160.75, which will protect you of any losses. You can see the highs that have been made are nothing but 160.45. It's again going to come at the top of the screen. The highs that were made are going to come at 160.45. So you got saved by the ATR you were using. So even on a normal basis, you can use one ATR to protect you of any stop hunting that takes place on a usual basis. So let me repeat this trade again so that you can understand before we move to the last concept. In this example, again, I'm saying daily chart showed that market structure is weak. We got a breakdown. So we were looking to short an unnecessary rally that we got in the market. Now we went to a 1 hourly chart as usual, found a good rally, which was overbought. On the overbought conditions, we started going short on Manappuram Finance. Because of that, we have to put an SL. Always put an SL because you cannot be 100% right. You could be wrong also. Maybe the markets are reversing. That's why we need an SL. So for an SL, I will recommend in this approach, put one ATR. Go on the ATR indicator, whatever is the ATR value when you are going overbought. In this case, it was 2 rupees, 1.8 rupees. We put, when we are shorting the market above that 2 rupees, we put the SL and go short, and we got protected of this trade. I hope till now the entire concept is clear. So even if you, let us say, now, by the way, even if you didn't wait for a bigger short, even if you went short, by the way, at this point of time when you were overbought, you still would have made a good 10 rupees within the next 2 hours. So you wouldn't have to wait for the next couple of days for that big fall. You wouldn't need this ATR of 2 rupees. Even without these, in the next 1 hour, when you went overbought, you would have made money. So the approach is not wrong. It is logical. I hope you are understanding. Now, finally, again, you can use it for investing also, use bigger charts, bigger time frames. Now, the last example is nothing but for intraday trades. A lot of you are hungry for intraday trades. So I'm going to give you, I don't use it, but again, you could always try it out. You could use any time frame, but I think I'm using in this example a time frame of Cipla, 30-minute charts, I think followed a 5-minute charts. Yes, this I think is a 5-minute. I don't know why it's not working, but I think it's a 5-minute chart. Yeah. So I have a 30-minute on the top and a 5-minute on the bottom. So pure intraday kind of trade, or a very small time frame trade. Now, what we are looking in this trade, same, nothing different. I saw that markets after a great, you can see over here, it's a great breakout that's happened. I am finding a pullback. Why? Because I can't buy at the top. I cannot chase the markets. So I got a great pullback. Now, when do I need to enter? If you remember that approach I've given you, one candle has to close a bit higher than the previous candles. Correct? Remember that? The previous candle's highs. Again, I will repeat, if today's candle is closing above yesterday's candle's high, that is a good signal that pullback could be ended. If you see this chart, can you see that every next candle is closing lower, lower, lower? You never closed higher. You never closed higher. You might have got green closings in 30-minute charts, but the previous candles were lower, 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 lower. Maybe you got one closing over here. So again, if you want to use approach, you might again be kind of up and down, up and down. You can use one ATR approach. Again, in this example, you might be safe, you might not be. But let us try to again combine this with a multiple time frame approach. In the multiple time frame approach, as I said, 30 minutes and 5 minutes, I think looks good for intraday. The pullback started. You can see over here, I think this was the fall corresponding to the pullback. 17th May. Actually, I've got it all wrong, I think. It's 13th May. One second. I think this was the pullback. Yeah. Let me just find it on the chart. Yeah, I think this is the chart, 14th May, 13th April. Okay, give me a second. Yeah, I think this is the area over here, right? 13th April, fine. So this is what we're exactly trying to do. So for an intraday kind of setup, pure intraday, I actually haven't seen this, I think. So you can see over here, Cipla starts to dip. Now, when do we enter? Now you can see, you can do this kind of trade. You are looking for a long trade on the intraday chart. So we go to a 5-minute chart, maybe a 10 or a 15-minute chart, and we find out when we are oversold in the market. And you can see at this point of time, when the pullback is starting, we became oversold in the market. So if you started buying on the intraday basis at that point of time, that was around 896. Can you see that you made a high of 926? Now, is that wrong? You might have gone down again later, might not be 100% accurate on a positional basis, but if you were an intraday trader or a one hour, I mean a short term guy, wouldn't you have made a great amount of profit on this trade? I hope you're understanding what I'm trying to say. You could use 15-minute charts, 30 15 minute, 15-minute, 5-minute. You could always switch it out. So let me also see that the other, I think the third May pullback that's happening. Let's see if we could find the bottom for this. I mean, it's not a pullback actually, but it's not actually a pullback. So we can't, it's a great decline. It's a breakdown. This is only going to work for pullbacks. So this is the one I was concerned out because it's a breakout giving a pullback. So on a pullback, find RSI oversold, enter that, you'll make some money. That's about it for now. I don't know how long it's been, but I hope it has been useful. Let me know in the comments. And if you're new, subscribe. It's always free of cost, but it always benefits me. And as I record, it's Saturday night, 11:30 p.m. And I thought, why not, what's better than recording a video for my lovely community that support me a lot. So thank you all for that beautiful support. We've touched 12,000 subscribers on YouTube. This is my gift to you, something I use in my trading to find tops and bottoms. I hope you benefited. Thank you so much, and love all, serve all. Good night.